to get more specific, I think the areas that will have the largest change due to the presidential elections or a change in presidents would be the healthcare sector and the energy sector.
In a positive way? Well, I mean, it depends on who's elected, I suppose. Yeah. Okay, good point.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Why trade alone when you can access over 100 years of trading experience right at your fingertips? Simple strategies, proven tools, real-time alerts, and an interactive trading community await. Keep it simpler with Simpler Trading by visiting their website at simplertrading.com and check it out with a $7 trial today. That's at simplertrading.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special guest online, Joe Rokup from Simpler Trading. Joe is based out of Chicago, and he had an idea that we wanted to talk about today, and I think it's going to be very pertinent to a lot of people. What in the world are we going to do this presidential election coming up there, Joe? Pretty excited to hear your thoughts on it.
Thanks for having me, Chris. I appreciate it, and happy to be here as always. And looking forward to having a little discussion.
Yeah, for sure. So I see a bunch of charts going on there behind you. Are you already planning on your moves for the election? Or, I mean, like for me, I'm not even thinking that far out. But I know a lot of people are already, I was just talking to Jack earlier, are already planning for a lot of volatility heading into the election. And maybe that's what we're seeing now in the markets going on. What are you thinking these days on it?
Well, it certainly can be a confusing time, and there can be a lot of, false opportunity that seems to be presenting itself out there with, conspiracy theories and, strategies that would be employed based off of, various laws, etc. But the reality is the actual effect is generally a lot more muted, in my opinion, than what most traders anticipate. Generally, the actual policy shifts that occur are very singulatory, or they act very specifically to individual market sectors, and we don't really see a broad change across the mass spectrum of the stock market.
So you're saying post-election, not to see much going on in macro changes. Is that what you mean?
Right. So after the election, the amount of economic policy that can be adjusted is actually quite limited. The amount of laws, regulations, et cetera, that can be passed, that is limited as well. So if you say what's going to happen after the election that will affect change is very little, then there's even less to do to anticipate it moving forward, right? Mm-hmm. So what we'd want to look for now is volatility or underpriced assets or asset classes. To get more specific, I think the areas that will have the largest change due to the presidential elections or a change in presidents would be the healthcare sector and the energy sector.
In a positive way? Well, I mean, it depends on who's elected, I suppose. Yeah. Okay, good point. All right. So leading up to the election, we might see more volatility. Post-election, healthcare and energy sectors getting potentially some movement around them. You mentioned something a minute ago that I am really curious about. What are these conspiracies you're talking about?
Oh, well, in terms of, I don't want to get too off.
No, I want to get too in the weeds. This sounds like fun.
Run down that rabbit hole. But in terms of the corporate bonds that are out there, what the government's going to be buying up, what they can actually afford to buy, what they'll make bids on, and then what will actually be traded. That's a whole another discussion and a whole other topic. But that's something that traders are looking for to really move the market. And if you look in August, the government did not buy any bond, and you can see that prior to the Fed talking about actually digging into and buying corporate bonds, the needle moved significant before anything was ever actually even done. And those are the types of moves and changes I feel that we can expect prior to the election in terms of volatility and fear and unknown, right? Because ultimately, fear is what drives the market more than anything, right? And so if there's fear, if there's uncertainty, we expect volatility, and we would also expect volatility to shift towards the downside. And the reason is if there is a change in our political leadership, right, that will cause some instability, some unrest, which creates fear, and then people take money off the table, right? When people take money off the table, then there's going to be a lot more downside pressure, right, from the bear.
Right.
So that's something to be prepared for.
Yeah, and that reminds me, I mean, now, looking back at March 2020 and seeing that, 30% down move, 35% down move, and now we are in September 2020, and we're having more volatility come in the market. The NASDAQ dropped like 11% in 2 days or something like that. I think there's a lot of traders and certainly a lot of mom and pops who, if they didn't take their money out the first time and they were able to maybe get back to break even or maybe even positive with their investments, I think a lot of people are maybe on that verge thinking this is just going to happen again, right? There's no longer a steady, how you call it, a healthy correction. It's either like falling to zero or going to the moon. It seems like there's nothing in between.
Right. So just to reiterate, so in a year leading up to an election, generally the returns are about 1% lower on average. If you go back, I believe to about 1930, right? So let's just round off, call it about 100 years. So leading up to the year leading up to election, generally, again, the returns are on in the equity market, in the equity sector, is about 1% lower on average versus any other 12-month period, right? So to have such a big jump from that break is quite unprecedented, obviously, right? To have such a large pop after that pullback correction, that's also unusual. So the number of variables that we're experiencing right now, and of course, not to mention COVID-19, the number of variables that the market is pricing in right now is also unprecedented, right? And so that feeds into volatility in and of itself. And then you add in the election, and things get even more uncertain and even more scary, if you will. Thus, when the market breaks, it's going to break really, really fast because nobody wants to be too far behind the 8 ball.
Right.
Now,
okay.
But what that does for day traders or shorter term traders, right, is that gives us the opportunity to buy underpriced assets, right, and to buy companies that are experiencing a pullback or a correction as opposed to companies that are falling off the ledge. So that's one of them. And so as traders, that's our objective, is to decipher or decide which of those two scenarios is happening. Is it A, falling off the ledge and it's gone, or B, is it just a pullback or a correction correction and an overall bullish move.
Right. All right, Joe. So with that being said, what are we looking at these days, or at least what are you looking at these days? The first time that we talked, it was heavy about energy, trading oil, and getting deep into that sector. But that's really that's kind of dried up. I mean, it's not really going anywhere. For a hot minute,
Right.
we had precious metals that were on a tear, and now they've kind of settled down. What are you looking at these days?
So I have the majority of my risk capital shifted into equity futures. I'm looking at the S&P 500 future or the ES. I'm looking at the NASDAQ future or the XQ, and I'm looking at the Dow Jones Mini or the YM.
Mm-hmm.
And those are the three main market vehicles that I am using at the moment to really maximize my risk reward and ROI.
That makes a lot of sense considering right now that's where all the movement's at. So that seems like the place to be. So are you trading them for both long and short, or are you just trading one direction right now?
I'm looking both long and or short based off the time frames of my specific trades, and I think it's important to always have three views, either quarterly or yearly versus monthly or weekly versus daily, right? So those are three very specific or very individualized or unique time frames that one wants to look at. And for instance, I could be long on the quarter, short on the month, and long on the day. It all depends on where we are in that standard deviation cycle.
Right. Do you get that from the triple screen trading system by Dr. Alexander Elder? That's exactly what it sounds like.
I'm not familiar with that, but
oh no.
Nope.
Yeah, he's written several books, and I know some friends that were personally coached by him. But that was his whole thing, is exactly what you described, which is finding three different time frames and trading based on those three different times. So it sounds like you're in good company there, at least.
I mean, you can break that down into seconds, minutes, and hours, right? I mean, that's how granular you can get with that particular strategy or that particular viewpoint. But what I have found is there are three distinct trades that one can make on time frame A, B, or C. And if you're looking at three types of trades over three types of time frames, it gives you a clearer picture and a bias that is being driven by price as opposed to your price point that's being driven by your.
That makes a lot of sense. All right, so the takeaway for here is, what I'm gathering is, post-election, probably not all that much is going to change. But leading up to the election, the traders would be interested in going into indices, like indexes, futures, maybe SPY or QQQ even, because that's where the action may be leading up to the election. Am I right? Am I on point here?
Yeah, that is my thought process. Yeah.
Gotcha. And that makes a lot of sense to me, right? You've got a lot of people who are burned from earlier this year, and you've got a lot of people who are new in the market because of stimulus money. Like take Robinhood, for example. Their user base has grown 40% in 2020, and it's a lot of people with the stimulus money opening accounts, and that's great for the industry as a whole, but it's also scary because, as the statistics are, it's like 90% of traders lose 90% of their account in 90 days. So, I mean, it's a scary place to be if you don't know what's going on. But it's also a lot of opportunity, which it sounds like that's exactly the way that you're trading it as.
What's risky about the Robinhood fact is that stimulus money is really not meant for those it is not really meant for that type of activity, in my opinion. It's really meant to kind of help stimulate local business as opposed to investing it in the market. So it's kind of unfortunate, in my opinion, that that's what we've seen happen with some of the kind of the stimulus package. Because again, I think the money is better spent from our economy on local businesses,
Mhm.
and that's what would make the change, as opposed to additional capital being put into the stock market,
Right.
because that doesn't have nearly as positive of an effect as the latter. But having said that, yes, it does provide lots of opportunity. The larger the market.
Yeah. Well, cool.
I've written a short guide on how you can use the triple stock profit system. It's the secret weapon every investor needs right now to change your financial future, and you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter.
I tell you what, this gives me a little bit of help and understanding, and I hope it does for the audience as well. As far as, post-election, not really too much to worry about. Leading up to the election, lots of opportunities, and that's the way that we should be viewing it. But also, of course, keeping risk in check, because 2020's been the craziest year, and the last thing that we need is everybody going long and then the market just dies. And so, keeping your risk in check is going to help a lot as we hopefully get through the year 2020.
Absolutely.
So, Joe, I really appreciate your time today. I'm gonna wrap it up here and let you get back to taking other people's money there on your up in Chicago.
All right, sounds good. Thanks for having me. I appreciate it.
Yeah, absolutely. And again, thank you for your time, and thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.